Well, all right. It's a pleasure to welcome you all again for this session of our webinar. And I would like to start by presenting the next keynote speaker, who is none other than Binyam Mesfin, who is a development and investment finance consultant who has more than 20 years of experience and with a particular emphasis, of course, on the private sector development and job creation. He advises the Investing for Employment, which is an investment facility that was created by the KfW Development Bank, on private as well as public sector project financing. He is also a member of the implementation committee for the Emergency Jobs Protection Facility, which is a fund that was set up by Germany, UK, and Ethiopia in terms of trying to protect jobs in Ethiopia's textile and garment industry from the impacts of COVID-19, which have been quite rough, while supporting the country's economic recovery. Welcome, Binyam.
Thank you, Merit, and hi, everybody. It's a pleasure to meet you. As Merit said, my name is Binyam Mesfin, and I'll be talking about a very important topic, I think, in business, which is how to get financing. So let me share my screen. Just give me a second, and we'll take it from there. I hope you can see my screen. I'm sure Merit is keeping up on things, so she will let me know if things are not working. So our topic today is getting financed, particularly how, as an SME, what is the financing landscape in Ethiopia. So the main takeaways that I want you to take from this keynote is that these 4 points. If you can get a good grasp of these 4 points, I think you'll be in good shape to get finance. So one is, what are the various financing options available to you as you expand your business, as you scale up? The other is, what are the key challenges that you expect, as you know, in any part of your business endeavors? Financing also will come with its challenges, and what are these challenges? And third, what are the tools and remedies that you can use to mitigate this challenge in getting financed? And finally, despite popular belief that loans and credits are not the only means of financing SMEs, and there are alternative financing programs, grants, supports by various international companies, international institutions, and I want you to take stock of those and try to align your needs with those. So just to give you an idea that if you feel as an SME that you've always had the challenge in getting financing, everybody understands that, and you're not alone. So as a country, we have recognized that we lag behind in SME development and SME competitiveness, and the primary reason that we think, and we agree, and research shows, is that the availability of financing, access to finance, is one of the things that hinders SMEs not to grow, not to be competitive. So various programs are geared towards currently in alleviating that, and that's what we mostly are gonna do. Are gonna discuss throughout this program. So the first thing that I really want you to understand is, when we say SME, we're talking about, it is an acronym, right? It is small and medium enterprise, but there is an additional letter, which is micro. So you hear a lot of people talking about MSMEs. So that is micro, small, and medium enterprises. So when you're trying to get financing or strategize how to get financing, you have to understand where you lie in the spectrum. So the first is the micro enterprises. These are usually companies in the service and manufacturing industry, which you are in, with employees less than 6. This is the standard definition most institutions use, including the government. And when we talk about small entities, we're talking about companies with employees between 6 and 30, and medium enterprises between 31 and 100. So they're a little larger. So these are the number of employees or the number of jobs that SMEs create is the primary tool in classifying them. However, sometimes entities will also consider how much capital you have. But most importantly, it is the number of people that you employ, including yourself, family members, and things like that. The reason that this is important as we go through the various financing options, each type of institution focuses on a specific kind of entity or a specific kind of company in the SME or MSME category. What are the financing tools that are available to you? We're going to cover this. Well, first one is, I'm sure most of you know, is either credit or loan that you get from banks and microfinances. But we'll also talk about what we call leasing. I don't know how many of you actually know about this, but I will introduce what leasing is and what are the various kind of leasings and what kind of leasing is available in Ethiopia. And finally, we'll look at grants. This is money that's not going to be returned, but under certain competition, you'll be getting a certain support to mitigate any financial gaps you have in any specific area. So first one is when we say credit or loan, we're talking about from MFIs and banks. So going back to the definition, currently there are about 40 microfinance institutions in Ethiopia. Now, what makes microfinance institutions unique is that they provide small loans. So the average loan size of a microfinance institution is about 50,000 Ethiopian birr, and they expect payment to be anywhere between 6 months and 24 months. And these are usually termed microloans. Why do we call them microloans? Because these loans are usually targeted at micro institutions. As we say, micro institutions are institutions with less than micro companies like yours that employ less than 6 people, right? So if you are in that category, microfinance are your best bet because they actually exist to cater to companies like that. And if you're a small enterprise, of course, you should talk to microfinances. They also will be financing you, but the amount will be a lot larger, like 250,000 Ethiopian birr, and the payment terms might differ depending on that. But if you're especially a small and medium enterprise with more than 6 employees, I would suggest that you look at these 2 microfinance institutions, and Nasser Microfinance Institution and Aggar Microfinance Institution. For full disclosure, I don't have any affiliations with this, but research shows that these companies are established with a specific business plan, business model to cater to small and medium enterprises. So that will make things easier for you rather than trying to get a micro loan or multiple micro loan from small microfinances. If you go to a larger microfinance that caters to small and medium enterprises, you would be you can get loans processed faster and get the amount you need much quicker. So why these 2 entities? For example, they can provide you with loans between 250,000 and 1.3 million. That's their average currently. And the repayment modality also give you a longer period to pay it, 24 months, 36 months, compared to microloans, which usually start at 6 months, and pushing them to 24 months would require for you to show a lot of business potential. MFIs, all MFIs expect you to pledge collateral. This is one of the big challenges that you're going to face. I'm sure you understand this. But also, you have to understand that when we talk about collaterals, we're not only talking about buildings and houses. Currently, there is a legislation in place that will allow various things to be collaterals, like vehicles, machinery, even share certificates. If you own a share in a bank, then that can also serve you as a collateral. So if you want a full list, I'm sure this document will be shared with you. So I've put the list of all microfinances. Whereas when it comes to banks, banks usually cater for medium-sized enterprises. So if you're in a medium-sized enterprise that is above 31 employees to 100 employees, then rather than dealing with microfinances, which will be smaller for you, then you should be dealing with banks. So the banks can provide you with a larger amount. As we said, the average loan size of a microfinance caps at about 1.3 million for small enterprises. So for medium enterprises, you can push that limit above 1.3 million up to 10 million, may probably, and get a much better terms. If you're a medium enterprise, again, you would take the advantage of banks having a lot less interest rate compared to microfinances because of their business model and the risks they take. But you have to understand, if you go to banks, then the banks will require you a lot more documentation than microfinances. So what are the key challenges to keep when you're approaching microfinances and banks? One is they have a collateral requirement. So most banks in the entire industry is usually criticized for requiring high collateral values and also valuing assets at a lower price, at a lower market price. And the other challenge that you're going to face is the cost of borrowing, which we normally call interest rates. And finally, you could find it hard to get financing because of various characteristics, especially if you're at an early stage, at an early stage of establishment, as a startup. It might be somehow challenging to get financing if you don't know which entities you're talking to. So usually banks would not be interested in financing a startup because of the risk involved. But if you go to microfinances are usually geared towards that. So how can you increase your chance of securing a loan? Given those challenges, if you do certain things, then you will increase your chance of securing a loan from either a bank or a microfinance. The first one is know which institutions to target. As I said before, based on your category, whether you're micro, small, or medium, the institutions that you target will differ. As I said, if you're a micro, you target microfinance institutions that cater to micro companies, whereas if you're a medium-sized enterprise, you target banks rather than microfinances, right? Then the other is find out, do your research and find out what sort of documentation the institution that you're applying to requires. Because each entity, whether it's a bank or a microfinance, the amount and the type of document that you're required to produce will differ. So if you have this information pre-hand, then it would give you time to prepare your documents and submit a near complete application rather than taking a few months going back and forth with these institutions and trying to fulfill their requirements. This also means that this is one of the key things that you have to keep in mind. You have to keep proper documentation. You're in business now, right? You're licensed, you're in business, which means that you have to maintain your own accounting books. You have to keep track of your receipts. You have to keep track of your sales, contracts, revenues, because all these documentations will be required when you apply for any sort of financial support. The other thing that we usually see as a bottleneck in application for loans is the ability to prepare business plans and cash flow projections. Now, you know that there are consultants that would do this for you, but given that you probably are at an early stage of your business, securing consultants to do these things for you for an application probably won't make sense to you in terms of paying the amount required. But there are various programs that can support you in getting the skills, one, or also getting the technical assistance to do these things. Our inventory currently shows about 18 such programs in Ethiopia, providing various forms of support to small and medium enterprises, and most of them provide technical assistance, training, and things like that. So you have to do your research. I can also give you a list of entities you can talk to and up your skills in business plan product preparation and as well as cash flow projection, because this will make a key part of your application for financing. Next, as one of the challenges, we say that, as one of the key takeaways, you can take if you do your research properly, loans and credits are not the only ways to finance your business. There are a number of grants available from various entities, and you can use those to mitigate some of the financial gaps you have and also reduce the risks you have. And we'll talk about some of those, even if not all of them, but we'll discuss at least most of them. And then, as I said, when it comes to collaterals, we're not talking about only buildings, and we're not only talking about houses, but there are a number of alternatives, including inventory. If you have inventory at hand, that can serve as a collateral for you to secure loans from specific entities, particularly microfinance institutions. Now, another thing is, if loans and credits are not the way to go, especially if you're trying to secure equipments, you have to consider what is called leasing. So a leasing is like renting a machinery which somebody else pays for, and you pay a monthly fee. And in most cases, by the end of the lease period, you would be allowed to keep the machinery. So consider you're going to a leasing financier, asking them that you need a machinery for a specific business for 500,000, but you can't afford it. So what the leaser does is that leaser buys the machinery, gives it to you under various arrangements. We'll go through the most common arrangements, and you keep on paying that leaser using the machinery and keep on paying the leaser for X amount of money that you agree for a specific amount of period. And when that period ends, if your agreement says so, you can keep the machinery when all is paid for. So let me just give you a few examples. So first one is financial leasing. When we talk about financial leasing, we're talking about long-term, non-cancelable lease contracts, as known as financial leases. So the difference between this and a rental is, if I rent you an equipment, I can always ask you to give it back at a specific point, then that will entail a risk for you. But if it is financial leasing, the contracts are not cancelable. So as long as you keep on paying your monthly lease payments, then you can keep on using it for that contract period. So during the use, the risk of ownership is yours, just like your own machinery. You have to maintain it. You have to repair it. If insurance is needed, you have to insure it. But the title deed will remain with the leasing company until you conclude your payment and either return the machinery or outright purchase the entire machinery. The second type of leasing is operating leasing, which is a bit different from financial leasing, where the leasing agreement gives you a specific number of months for the machinery to be used by your business, and it will be returned. During that period, you're not going to be, the leaser cannot cancel the contract on you. For instance, if you agree for 2 years, the leaser cannot cancel the contract on you, but at the end of the 2 years, you have to return the machinery. And during those 2 years, the company that leased you the machinery will have the responsibility of maintaining and upkeeping it. So that's the main difference between operating leasing and financial leasing. The other is hire for purchase. This is the same as the first kind of leasing, but this definitely will allow you to keep the machinery at the end of the period. If these things are confusing, then we can discuss them during the Q&A session. But the reason that I'm talking about this is because I want you to take advantage of a leasing financing currently being given by the Development Bank of Ethiopia, specifically targeting small and medium enterprises. So it is a hire for purchase leasing, which means Development Bank of Ethiopia will cover 100% of the cost of the machinery and 80% of the working capital needed to run the machinery, where you're only expected to cover 20% of the working capital, that is salaries, raw material, rent, office space, storage space, and things like that. And by the end of the period, by the end of the lease period, you will be owning the machinery. By the time you completely pay off the lease, you will own the machinery, which means every month when you pay a certain amount of lease payment, you will be gradually owning the machinery until the end of the lease period when you will be on it completely. It is particularly targeted at SMEs, and as you can see, manufacturing is part, which is normally the garment and fashion industry is considered as part of the manufacturing industry, so you would qualify for this. So if you look at it, what they have done in the last few years, they've covered a lot of companies, and as you can see, most of the cover, the leasing financing goes to manufacturing industry, which is a good news for the audience today because you're considered part of the manufacturing industry. And most of the time, the financing goes towards equipment cost, which is, as you know, capital expenditure, a large amount, and it would be a great support. The other is there is a private company called Ethiopia Leasing, which also provide the same kind of service, but this is a private company. And usually if you're a medium kind of enterprise, then it will be the same thing, but this is a private company and they're profit oriented. So you have to make a cost benefit analysis. But on the DBA side, I'm going back, but on this side, this is a project financed by the World Bank and other development partners. So the requirement, both the documentation requirement as well as the application process would be a lot less stringent. So I wanted to keep this in mind. The next one is, okay, we say that for loans and credits, you take money, you have to pay it gradually. For leasing, you take equipment and you pay for it gradually, but the third type of financing is grants and other fundings available for you from various development institutions. So I've classified this into two parts, general support and support in relation to economic shocks for COVID. So the first one is general support. I have 4 projects there, and on COVID support, I have 3 projects there. Now, the reason that I included this is for you to see, this is not an exhaustive list, but for you to see, you shouldn't only consider loans or leases as a way of financing. These programs are established by various development institutions like the World Bank, KfW, and the European Union, and other development agencies to provide support to companies like you. So I wanted to keep that in mind. So for instance, the first one is the Small and Medium Enterprise Financing Project that is established by the World Bank. This is a project for, as you can see, a large amount of money, $269 million, that's in dollars, funded by the World Bank and then the European Investment Bank. So this program is currently run through 7 microfinance institutions, 6 private banks. So you can go to any of these companies and ask them how you can participate in this project. Instead of collateral-based lending or collateral-based granting, this project usually focuses on cash flow-based analysis. So that's why I say that if you can show how much income you're getting, how much expense you have, and when do you expect your business to pick up, when it's going to slow down, and show this in a standard format, which is called the cash flow statement, then you can go to these institutions and present that and try to secure concessional loans with very low interest rates as well as grants. So currently 550 SMEs have benefited at, as you can see, at a large amount. Collateral requirement is very much reduced. And this has shown a lot of potential. So the project, I think as of in the last 2 weeks, got an additional funding to continue operating because it was coming to an end of its life. So as you can see, just to give you some data, again, from this graph, what I want you to take is, one is that manufacturing is a very interesting area for most of these projects because that's where you are. And as you can see on the right side, type of collaterals, as you can see, MFIs, especially through this project, would require you a lot less collateral compared to banks. So if you're a small or micro-sized enterprise, going to MFIs is your better alternative. just because of this reason, if you forget everything else. And also, the good thing about this project is if you see to the bottom left corner, if you see most of the lending is given to new enterprises. One key criticism of such programs in the past has been that banks and MFIs only lend to their existing customers. And one of the things that this program tried to do was to encourage newcomers to get lending. And as you can see, out of the 550, more than 50% were new customers to these institutions. The other is the Women Entrepreneurship Development Project, which is focused completely on women-owned businesses or women entrepreneurs. And again, this is also a financing project. There is plenty of information on this, and we can also provide you additional information on this. But the main pillars are access to finance, mostly microfinance, which means, as we say, focuses on companies at the startup stage of their life. And skills development, as we said, if you go there, you would learn how to develop business plans, make cash flows and things like that, and also project management skills and support. So as you can see, so far they have dispersed more than 4 billion for 14,748 loans. That's a large. If you go there or do your research and if you qualify, then I think this is one of the projects that you look at. Yeah, there is an SME grant scheme by Sequoia, which is a GIZ program. And this is targeted at creating jobs. So one of the reasons that I keep on saying do your research is because if you want to qualify for this kind of program, their main agenda is creation of jobs, which means you have to show that by getting this grant, which is usually between 15,000 and 50,000 euros, you have to show that you would be hiring a lot more people, expanding your business. So if you do your research, if you're not going to be hiring, but if you're just going to be buying a machinery and run your current business without increasing your workforce, and the Sequoia project might not be interested in you. So that's why I keep on saying that you have to do your research. You have to know which entities to target for your specific need. So the grant scheme targets SMEs in the manufacturing and service industry with a priority for the garment industry. Currently, they have about 80 SMEs they're supporting, and they're hoping that they will get a lot additional funding so that they can expand that number. But they, as I said, they will provide you business training and coaching by qualified consultants, mostly international consultants too. Machinery support, if you can cover 20% of the cost, they would be willing to support to cover the remaining 80%, and also provide a platform for peer-to-peer learning. The other is, there is a new project coming, which is an SME credit line project through Development Bank of Ethiopia. That's a KfW project, the company that I'm currently working for. And it will provide credit lines at a reduced collateral requirement, and also provide a COVID pandemic economic shock mitigation. It's a 20 million euros project, but this project is at an early stage, and keep an eye on it. And if you follow the Development Bank of Ethiopia website, I'm sure they would be having a lot more information there. And also I have given a few web links at the end of the slide, and I think that would provide you the information you need as we go. The other is COVID support. So now we've seen the grant and the credit lines that are supported by BPS, but now we know that COVID is affecting everybody. So there are a few programs that you need to take into consideration, and we'll provide you various supports. The first one is the MS's Resilience Facility. This provides you access to finance. This is for micro and small enterprises, and as long as you're a micro enterprise that's below 6 people, the definitions sometimes differ. I want to be clear on that. But the current definition of micro and small enterprise is the definition that I gave you earlier. So if you see those, for instance, here you can see that it says 2 to 5 employees on their website, but keep in mind that these things could differ. So this is one area where you can go, and usually what they do is they provide you grants so that you can support your working capital requirements. That could be salaries, office payments, store payments, so that you can sustain the reduced business you might have during due to the COVID pandemic that we're going through. The other is the Business Emergency Unit. This is a government project, a government-run project, and this also works through various banks. And I think the main bank that the fund is flowing through is the Development Bank of Ethiopia. And this also provides wage subsidies as grants. So these are two things that you need to keep in mind when you're looking at COVID support programs, because most of them provide this. One is it is a grant, which is the money is not, you're not expected to repay the money. The other is wage subsidy, which is if you have, let's say, 5 employees, you're expected to pay a certain percentage of their salary, could be including yourself, obviously, and the grant will provide you a percentage of the salary that's remaining after your payment. So, for example, for this program, 50% of the wages covered by the subsidy, and it will provide you for 3 months for a maximum of 7,000 bill payment per month. Now, whereas there is another program that's coming up, I want you to keep in mind this. This is also a KfW program, which is currently running through Awash Bank and Dashan Bank. And they should be advertising this program very recently. It is aimed to support 1,000 SMEs and 18,000 employees. So this is a large number, and it will provide you financing for 6 months for payroll grants, which we talked about, wage subsidies, interest relief. If you currently have any loans that you are not, you're struggling to cover, it will cover the interest for it. So, and also provide you personal protective equipment like masks and things like that, if that is required by your business. So this is one facility that's coming up. So these are the key projects that I want you to keep in mind. So I'll circle back to what I said. So through this presentation, if you have understood what are the financing options that are available for you, what are the key challenges that you're going to face, and what are the tools that you can use to mitigate those, and also understand loans from banks and microfinance are not the only tools that you have. You have leasing, which will enable you to acquire equipment, as well as you have grants from various institutions, which will mitigate any risks that you might have, as well as, you know, fill any of the gaps that you might have in terms of financing. And I think I'd call this, Keynote a success. But if you have any questions, I'll be very happy to discuss. So in the PowerPoint, I'm sure it's going to be shared with you, I have included some success stories from the small and medium enterprise financing projects. So I think they will show you that companies like yours got money and got support and became success stories. So I think with that, I will conclude my keynote. Over to you, Meharat. Thank you very much, everybody, for listening.
Thank you very much for that in-depth explanation of the various opportunities and the financing possibilities that do exist. So I do have quite a few questions for you. And of course, when it comes to financing, I believe that there are many sectors and many fields that reach out to you. So it can be hardware versus service, for example. So I'm wondering, what is more likely to be financed?
Currently, if you look at the government's areas of focus, and there is a 10-year economic development plan where SMEs are given as pillars. We're trying to create about a few million jobs by 2025 through the Job Creation Commission. And the focus is on 5-6 sectors. So sectors like tourism, mining are there. But one thing that the government keeps on saying is manufacturing and industry is the biggest player in the expanding economy. And in that, the government sees small and medium enterprises playing a larger role. I want to say 2 things are coming up in this regard. One is the regulation that governs the micro, small, and medium enterprises is being revised, which shows that there is a focus on SMEs, MSMEs. So that's one. The other is there is also a startup regulation coming up to specifically support startups. That's one. Two, most of the banks 5 years ago didn't even consider financing SMEs. Usually the microfinances focused on supplying microfinancing to micro enterprises. So now you see this converging on small and medium enterprises and a lot more interest. So most of the banks now have an SME division. So I was in talks with, for this presentation, I was in talk with the Commercial Bank of Ethiopia, and their SME division is very interested in finding out who we're talking to, how can they support and things like that, and including how they can provide technical support. The Development Bank of Ethiopia currently run, I think in the last month or so, they run a number of trainings for small and medium enterprises that they want to participate in their leasing and other SME support programs. So from a sector point of view, I see manufacturing, as also shown in the various stats, manufacturing is a big part, and for classification purposes, and in its nature, the garment and fashion industry is also considered a manufacturing sector industry, as an SME. I hope I answered your question.
Yes, you have. I actually managed just to go look for other questions. And yeah, so I have another one. When it comes to formulating a good business plan, what do you think it should contain for those who are wondering what to put in a business plan?
So the one thing that banks, any financier, whether it's grant or loan, credit, leasing, what they look at is, do you have a sound business idea? Do you have the skills to support that idea? Do you have the financial and other requirements to run the idea? And if they give you the financial support, will you succeed? Now, for banks and microfinances, when they say, will you succeed, they're implicitly saying that, will you be able to repay your loans with the required interest? Whereas for grants, they want you to succeed because the program's success are measured by the success that you show. So, as I said, there is no single formula for preparing business plans. I can give you an outline, but the key things that you need to show is, one, you have a sound business idea. I'm sure as business people, you understand when you see a sound business idea. Then, once you have that sound business idea, you have to show that you, as an owner, have the skills to make that business idea successful. One, then you have the resources you need in place to do that. For example, do you have the machineries? Do you have the manpower? Do you have the working capital requirements? Then you can show them that, okay, I have this business idea. I know I can make it. I have these resources. Then all I need is this support from you so that I can move this business idea from the current level to the next level. If it is a startup trying to scale up, you can show them that. If you're a new business trying to start a new business, you can show them that. So I think that's one of the key things. But as I say, there are a number of support programs. I can also share those with the organizers, and they can share them with you. Is that there are a number of programs that you can utilize to get the skills. These are very specific skills. These are skills that are not only for consultants, reserved for consultants. So these are skills that you can learn, you can improve on, and I urge you to take advantage of these various programs. A simple example is the MasterCard Foundation, which is running the first COVID response program that I showed you, the MSE COVID response. They also have a skills development program that you can participate in. So if you can do that, I'm sure you can up the skills, and you can benefit greatly from that. Over to you, Mara.
I do believe that before I go on to the other list of questions that I have here, one of our participants has raised a hand. Chris, I am going to allow you to speak, maybe so that you can ask your question yourself. So. Are you there? Are you with us, Chris?
Chris, you have to unmute yourself, otherwise we don't hear you. You can do that in the bottom left of your screen.
Yes. So in the meantime, as we wait for Chris to unmute himself, or maybe drop us the question in the Q&A if that's an option as well. I'm wondering, when it comes to loans and paybacks, what is the average time? Of course, things differ, but what is the classical amount of time that one can expect to have on their hands?
So it depends on the institution and the type of entity you're in. For instance, if you're, let's consider micros. Micros, we said as a definition, companies with less than 6 employees. So usually their loans are very small and they can expect anywhere between 6 months and 12 months repayment period, usually. Under special circumstances, if you're actually engaged in construction or acquiring equipment, even if it is a small amount, then they can push that to 24 months. Whereas when you come to small and medium enterprises and you go to the larger microfinances, that period extends to 24 months, right? So when you go to banks, banks classify their loans in terms of short, which is 1 to 2 years, then medium, that's 2 to 5, then anything beyond 5, they call it long-term loans. So, but the banks, they can afford to give you that kind of loan, but you have to be at least in the medium category to actually benefit from longer-term loans, which are usually for construction, machinery purchase, and things like that. So it depends on the company, and it also depends on the institution, but this gives you the general ballpark.
Okay, and one question that probably will seem very simple to you, but then I believe that it goes on in everybody's mind when it comes to starting something of this type. What happens when we fail, basically?
Yeah, that's a very difficult question to answer. So first of all, we don't want to see you fail. So the reason that I try to give this overview of various alternatives is for you to do what we call de-risking, right? If you get your funding from various sources, and if you combine fundings, one, let's say from grant and another from loan, the grant is not a returnable money. So, if you fail, you're not going to pay it back. But the loan, you reduce the loan amount by using grants. So what I would say is, if you want the clear answer, is that microfinances and banks, they will require collateral, because if you fail, they would sell those collaterals and recover their money. I'm sure everybody understands. If you're considering leasing, if you fail to pay, then you're leasing an equipment which is worth money, and that equipment will be returned to the leaser and will be sold, and the money recouped. And if you have put equity in it, which means you've kept on paying for it, then you might recover part of your money. Whereas when you talk about grants from various institutions like COVID support, this is basically free money, to be honest with you. Once you qualify, the money is yours, and you're not required to repay the money, but what you're expected to do is meet certain criteria, certain goals. And usually these development institutions want to see you succeed, which means they'll not only provide you with the money, but also will provide you with the technical assistance you need to utilize the money and be successful. So as we were saying, if you have a good business plan, meeting those criteria, you have a sound business plan, you have the skills, you can back it with various resources, personal resources, and various sources, including grants and loans, then I think your rate of success is gonna be large. And also, one thing that I want to say is the country is gearing up to support its small and medium enterprises. So I think for the first time in a very long time, we're actually seeing government entities and other players actually saying that, okay, SMEs need to be encouraged because they're going to be the the largest employers compared to, you know, these big entities that we have across the country, because those can hire, you know, a large amount of people, but they take long time and a lot of financing and a lot of capital to set up. So they're slow to get from the ground.
All right, so I still see a raised hand. I hope you can hear me, Chris. If you're having difficulty unmuting yourself, maybe you could drop your question in the Q&A part so that I can ask on your behalf and see where we go from there. Let's see if we have any other questions. Okay. So I have a question of my own until others decide to join in. I'm wondering, because now that I'm exposed to this, it's easier to formulate these ideas and it becomes clearer. But for the average Joe, you know, with a beautiful idea, but who per se doesn't have so much access, how do we, you know, make sure that the broader public understand that there are new possibilities that are available now that were not there before? Because unless you're part of this circle, you might not know. So what do you do to make sure that people know about this?
Yeah, I think it's also that's a very great question. So being in certain circles provide you access to certain information. I'm sure people probably wouldn't know what COVID support programs are coming up in the next few months, right? So if you are, I've provided a few lists, as you can see, which are the projects that I covered in the presentation, and you know, regularly following up with these is one thing. The other is most of these projects, when they are launched, they want you to know about them. They want you to come and participate. So you have to keep your eyes open. They come on newspapers, various social media, and you know, some of them go on radio and TV to tell you know, potential participants or targets, to tell them that, okay, there is this opportunity. But would that cover everybody else? Maybe not. Maybe we're living in a situation where, you know, the information asymmetry, as we call it, is great, because we're not that developed yet in terms of providing. But currently the online resources are great, because most of these programs, they will have the web pages providing additional information, providing what you need to apply, what are the requirements, the eligibility criteria, and all those things. So if you're fortunate enough to be connected, whether on a computer or on a phone, and you can access those things. But sadly, there are, I'm sure, you know, young people with bright ideas that are not blessed with having that ample connection to the internet. But I think as we go forward, I see a lot of companies trying to bridge that gap. And I hope information becomes widely available. But currently, I think we have to work with this in newspapers, TVs, radios, and things like that.
Indeed. Okay, so we do have another question. So it goes a little something like this. It goes, how can one get help developing a good business plan or concept note that will obviously attract those who are supposed to grant the loans and so on? Because at times it's very hard to wear different hats when you are a creative person. So you're at ease with the creative process, but then again, when it comes to the nitty gritty, you know, might not be your hat per se. So
yes, that's understandable. So as I said, if you have a great idea and you're ready to implement it, there are specific programs that can support you in that regard. We can share a list of those programs. I can also display it on the screen if needed. But the thing is, most of the SME support programs understand exactly the question that is being asked. You know, you are a designer. You're not supposed to, you know, be an expert in cash flow statement preparation, right? And you're at the beginning of your business, and maybe 5 years, 10 years from now, you understand all the nitty-gritties of pitching your idea or your investment need, but now you're not. So take advantage of this. I'll provide the organizers the list, and you can look at these entities, and they will provide you with two things. One is they will give you the training you need to prepare business plans. That is one part of the answer, right? So of course you're a creative person, but with the proper training, preparing business plans is not, as they say, rocket science. You can learn it, and it's not that difficult. But I know it's very difficult to know where to start, so these companies will support you. The other thing that this company, these entities, these international support, international institutions do is actually offer you the technical assistance in a form of guiding the business plan preparation process. So even if you don't understand the whole process, a dedicated person will support you, especially if you're applying to their own programs. They have those things at hand. The other thing is, even if things are not active yet, I know there are a few ideas under works to provide SME training in this kind of areas: business plan development, cash flow statement preparation, income statement, documentation, and things like that. But I think it's a bit early to say when that will be available, to whom it will be available, but those things are coming. But I suggest that if you can, at least pick up the skill to understand what is needed and what goes into a business plan. And whenever you need it, ask for support from entities that are established exactly to provide you that kind of support. And that information is available.
Okay. Well, thank you very much for that in-depth explanation. I think we've learned a lot. I for sure have learned a lot. And I do also hope that we have been able to address all the questions that came into play, including yours, Chris. I did get an anonymous question, so I do hope it's yours, not to do you justice. Considering we don't have many questions left, well, I'd like to end the session here by, of course, thanking you, Binyam, for your amazing contributions, as well as thanking Anne for her insights in terms of what makes the brand DNA, and of course, thanking all the participants who have stayed with us until now. We will be logging off, and then we will be joining each other very shortly for the last part, which is actually quite exciting, which is the final program point. And that will be the pleasure of announcing the 6 winners of the Designing Market Success Idea Competition winners. So I do hope that you'll join us for that. And thank you once again for everyone who participated and followed. Thank you again.
Thank you. Have a great day.
All right, you too. Thank you, everyone. Catch you in a bit.